Hey there. Why did interest rates go down to 2%? And will they be
2%.
coming back? That is the big question a lot of people want to know. And we're going to get into that right now. So, back in 2021, we had interest rates as low, Mike had a refinance rate as low as 1.875. And the big question that people are asking right now, and they're actually waiting to make a move because they think that interest rates are going to go back down to that level. And you say what, Mike?
Don't hold your breath.
Really?
Really.
Why is
Yeah.
that?
So we want to kind of explain what was going on. And I always lead off with those rates in 2021. I call them fictitious or theoretical or improvised rates. They were manufactured by the government because times were really bad, as everybody knows.
Right.
Times were really bad. Nobody was working. It became a big struggle for many people to even make their mortgage payments. And the government had to figure out something to get the economy going and to help people out, to help people save their homes and help get those payments made. And it created one of the biggest refinance booms in history in that time from 2021. There still was houses being sold and
Yeah.
purchased, but it was sputtering along. There wasn't a lot of inventory. Everything was kind of on hold, and a lot of people were going into forbearance and couldn't
Yes.
make their mortgage payments. And the government finally had to do something to try to help the mortgage industry. The mortgage industry is such a massive part of the economy, and what they did is the first thing we just want to define. Now, this definition is not going to mean much to any people out there that aren't in the industry. But the first thing we want to do is define mortgage-backed securities. This is the most technical part of this whole conversation is the definition. What's a mortgage-backed security? It's basically, you can read on the screen. I can read it to you. It's an investment product similar to bonds. But these mortgage-backed securities are bundles of home loans that lenders have loaned out, home loans and any other real estate debt that the banks have issued, and investors invest in these. And they invest in mortgages for the return because they're a pretty solid investment in real estate and mortgages. And they invest in these mortgage-backed securities and receive periodic payments similar to bond coupon payments. So that definition doesn't really mean much to anybody, but what's important to know is what the government did with mortgage-backed securities during this time. And so I want to explain that to everybody. Take a couple minutes here and explain what the government did. Sometimes the government actually does things to help people, and in this case, it did a lot to help people.
Yeah.
But basically,
Because
just to
we
go,
because we basically had to get the economy moving again, right?
yeah, we had to get the economy moving, and for people struggling to pay their mortgages, what a blessing to be able to refinance it in many cases at half the interest rate, sometimes a quarter of the interest rate of what people were currently sitting at.
Right.
But how did that happen? It wasn't that banks just said, well, we'll just lower our rates. That's not how it works. There's an index and a margin and all this stuff, but we don't want to get too technical. But basically, here's what happened in 2021. The government decided to buy lots and lots of these mortgage-backed securities. They estimate in the billions of dollars. The government bought these. They're like bundles of mortgages sold to investors. And that move was part of this plan to help the economy during such a tough time. Like when people were struggling, like we talked about, to buy their houses or even keep up with their mortgages during the pandemic. So when the government bought these mortgage-backed securities, it's like they're giving banks a big thumbs up. The banks felt more confident because they knew they weren't going to lose money, even if people couldn't pay their mortgages. So because the banks felt safer, they were more willing to lend money to people who wanted to buy houses and more willing to refinance those loans to help people out with the refinance industry. So when the banks were willing to lend, they compete with each other by lowering their interest rates. It's kind of like when stores have a big sale to attract customers. They lower the interest rates, means it's cheaper for people to borrow money. And when more people could afford to buy houses, it boosted the market. It boosted the refinance boom. It stimulated the economy. And when people can continue to make those mortgage payments by refinancing at those low rates, they can continue to pay and not go into forbearance. So all of this helped the economy. But when the government bought buys those mortgage-backed securities, it basically injected a ton of money into the system, providing liquidity to the banks and the lenders. And that allowed the lenders to continue offering these mortgages to the home buyers and the refinancers out there at lower rates and still make a profit. And that profit margin comes off of what we call the Fed fund rate. And I did a video about this a while back. The Fed sets a Fed fund rate, which is a base. Right now, the Fed fund rate is at about 5.25 to 5.5. So you figure if you're a lender and you add a 1.5 or 2 point margin to the loan, that's why our rates are still in the 7% range, because they're only adding a couple of points of margin onto the government index. Well, the government took that index in some cases almost down to zero. Now, it was misleading because people saw that online and thought that meant mortgage interest rates were zero.
Right.
And all that meant was that the government rate, the index, was set so low that when the lenders added their couple of points of margin, you came in with a 2.5% interest rate. So that was a manufactured situation, because the government doesn't directly set interest rates for the lenders, but by buying these mortgage-backed securities, it influenced the overall interest rate environment. And it's because when there's more demand for mortgage-backed securities due to the government buying them, the yields on these securities decrease. And as a result, the lenders can offer mortgages at lower interest rates to borrowers while still earning a return on, a slight return on their investment.
Right. Right. So really the thought behind that is to stimulate the economy, to get money moving back around, right? Because people weren't going out and doing anything. And as much as people may think that it was related to one or another president, right? Like the government in general, who was in office at the time, it wasn't really related to that. It was really related to the fact that the economy wasn't moving. So
Right.
potentially, if we had another situation like that again, there could be a chance for something like that to occur again. Is that correct?
There could be, but think about what would have to happen in order for us to duplicate what they were doing.
Sure.
And as soon as the government finally said, okay, we're getting back to common ground, and they stopped purchasing all the mortgage-backed securities, they stopped injecting all that money into the system. What happened? Rates shot up, like my microphone. Rates shot up, and then now we're in a situation where home values are higher than ever before. They're not going down anytime soon.
Right.
Rates went up. So now we all know what's going on now. It's low inventory, supply and demand, high rates. And as of today, the government has put in place 11 price rate increases since March of 2022. 11 of them. And now we're all waiting for the rates to come back down.
Right.
But what we can truly hope for is rates to get down into the 4 to 5% range. That's reality. 2-3%, 1.87. That's not reality. That's manufactured. It was not falsified, but you know what I'm saying. The government created those rates.
Correct. But it was created based on the scenario that we were in at the time, which I mean, that's probably a once in a lifetime, if not once in,
Correct.
another lifetime situation. Right. So chances are it's probably not going to happen again. So basically, if you're going to want to purchase a home, you should be doing that right now, if you need to, right? Because
if you need to,
if you need to purchase a home right now, and you can always go back and refinance that home. Obviously,
are you gonna say the famous line?
I don't, because I don't talk about that. I don't say that, but
marry the home, date the rate.
You can do that. If you are in need of purchasing a home right now, which many people are. Would you recommend people to wait maybe until the next election? Because I do know that there are people that, based on who becomes president, that the economy might be better one way or the other. So what do you say to that?
I say there's no reason to wait, and here's why. Not because I just think people should just keep buying houses for the heck of it.
Right.
If you want a home, need a home, get a home, because the chances of the interest rates, they never go down as fast as they go up. And
Correct.
there's no indicators that they're going to. They may drop 20 basis points here and there every quarter. There's no projections that they're going to take any massive decreases. And I posted something a while back about the difference, what just like 1% on an average mortgage. I think the amount was like $350,000 mortgage. The difference between a 7% and a 6% on that same loan is about $175 in the payment. Now, yeah, it's not a huge difference. For some people, it is. $775 is a lot.
Right.
But if you're waiting for the rates to come down to buy a house, the other statistic I just posted was that next year, houses are going to be about $25,000, $26,000 on average more to buy the same house as what you would pay today. So you're waiting a year, the rate would have to drop an entire point in that year, which nobody's projecting it's going to. And the savings is so small compared to, it's like 11 years worth of that increase in the house price. So it doesn't make sense. And which gets back to, and we joke about the saying, and I can't stand it, but buy the house now, date the rate. You always have a chance to refinance a rate, but you don't have a chance to change what you paid for that house.
Correct.
So
And,
I say don't wait if you need a house.
and really, I mean, yeah, you know, in your mind, you can always think it's less house, but you have to look at what you're getting right now. You can't look at like, oh, if I bought, you know, back in 2021, I would have gotten, you know, more house for less money. You can't go
Right.
backwards. You have to think about where you are at right now, or you are always going to think that, oh, I missed out, or I'm not getting what I should be getting. No, at this point in time, if you get a house right now, guess what? You're in a house. You're in a
Right.
house, and you can always refinance that house when the time comes when your interest rates drop. You can always do that. So um, the house is always going to be that money making thing for you, something that's going to be bringing you value. So I would say just do it now. Don't wait.
Right.
All right.
Yep. I would say the same thing, because, if it's only 100, say on average, we're talking average numbers, $150, $160 difference a month times a year, how much is that? A couple $1,000. But in a year, on average, these homes are increasing in value anywhere on the average price home, $10,000 to $25,000 in increased value. So why wouldn't you want to buy now, and a year from now have all that extra equity that's almost guaranteed?
Exactly.
There's no sign house values are going down anytime soon.
Exactly. Exactly. No, they're not. I mean, you know, I've seen houses go down in the fall, like during the holidays, but those are more houses that aren't really up to date, and they need a little bit of work and things like that. But in general, 90% of the houses are still going over asking, getting multiple offers. And now that the summer market's here, it's even more so. So I would
Right.
say if you're in need, get it done now.
Get her done. Get her done.
Get her done. So with that, make sure that you get pre-approved through Mike if you are ready to buy a house, or if you just have some questions, reach out to Mike. Make sure that you are getting all your questions answered from a trusted mortgage professional, which is Mike Hawker. And then if you
Right.
are in need of a real estate agent, I'm always here trying to bring you education so that you are an educated consumer. So make sure you reach out to me. And any final thoughts, Mike?
I'm trying to build out my YouTube channel, but your YouTube channel is off the charts. So I think everybody should look you up, Sheila Cahoon, on YouTube, and subscribe. And there's incredible content. She's doing podcasts with title companies, some other mortgage lenders, just everybody in all aspects of the business to help bring knowledge and education to people. So I think you should
Thank
jump on that real quick.
Yeah. My big thing is I want people to be educated, because I don't ever want anybody to feel like they've been taken advantage of by any business professional. So it's better to be totally educated. Um, or at least close to totally educated, so that way you know exactly the questions to ask and to know when you are being misled. So,
Right.
all right. Thank you so much. I hope you all have a wonderful day. I appreciate your time, Mike, and take care.
Thanks. You too.